I'm Dan Sheridan, and this is Mark Fenton. We've been working together for a long time trying to teach retail traders how to make a few shekels monthly with options. Been doing this since we were both in our young teens. I'm joking. It seems like that at times. But let me just start out real quick, kind of the classes we're going to highlight, and then Mark and I will jump into, we'll talk about the market for a few minutes, and then we'll each maybe get a little example of something we're looking at now, kind of put some sense. It's kind of funny. I was going to say put some sense to what's going on with the election. I don't know if that's possible, but we'll try. Let me tell you what we got cooking, folks. So the last two classes of 2020 will be obviously November or the next couple months. And Mark and I will be teaching them. Mark will not be here next week. He's a little vacation. So I'll be holding the fort next week and he'll be back. But so class one that will be starting next Tuesday, week from today, managing short-term trades after the election with a bonus of trading the week before the election. So we'll be starting next week, Tuesday, and we'll be ending, and then the election will be the next week. So we'll have 1 week kind of before to look for stuff, and then 3 weeks after when things get a little more back to normal. And the focus will be on some shorter term trades, maybe duration, definitely under 3 weeks, more closer to 2 weeks or less. Dates of class will be October 27th through November 19th. We go Tuesdays and Thursdays at 1 Central. Usually classes go about an hour, and it'll be a 4-week class, and that'll be $397 on the 4 weeks. Class number 2, making and trading a 2021 trading plan. Dates will be December 1st through 17th. It'll be 3 weeks at $297, and that will be getting a trading plan for 2021, help you guys get one going, and then trading it for 3 weeks. So you can work through a lot of the logistics. And I think that'll be important as we're getting into the end of the year. Both classes together, just on their prices, would be $694. And if you get them both, because I think they're both helpful and kind of go together, with the discount, you get 20% off. It'd be about $555. So that's those are the next 2 classes we got going. You can do one, you can do them both. I'd encourage you. I think both, you'll get a lot out of it. And Mark and I will be there leading you through the way, and there'll be live trades each class. We'll have PowerPoint. I'll have some slides, at least some slides every class with some instruction. We'll be reviewing the live trades from beginning to end. So it should be a very practical class, looking forward to it, and just wanted to, in today's kind of just a little preview, just kind of jumping into the discussion, and you should learn a lot, and there should be very practical with the live trades. All right. With that being said, Mark, let's, if anybody has any questions, you could email me or Sheridan Mentoring. Mark, let's talk a little bit on the market, and give me just give your thoughts on the market, and then maybe since the first class will be short-term trades after the election, are there any short-term trades you're looking at now? Maybe give a few cents on the market. Okay. Chart of SPX, and then anything you may be looking at it. I mean, the trade doesn't have to be an SPX, but whatever's on your mind.
Yeah, well, I think that obviously very short term, we have the stimulus. Are we going to get it or not? The market, I think, is up pretty far. I suppose if they approve the stimulus, we'll probably go up over 3,500. I don't know how much more, maybe 50 points from here, 60, I'd say at the most. And if we don't get it, I suppose we'll be flirting with 3,400, maybe even a little lower over the next day or so. But there's always a possibility they'll kick the can down the road and say, well, we'll know by tomorrow. But I don't know. It seems unlikely we would get it with all of them, the fighting going on between the houses and the election coming up. But I guess we'll have to see. And then going into election week, I don't mind trading like non-directionally calendars flies as you go into it, but I think election week, I want to be flat on those, and whatever we may do could be speculative. For instance, I'm thinking maybe, I haven't looked at the pricing totally, but maybe before the election, if we can get one on, but I'd want to be a little closer, maybe the Thursday or Friday before the election, look at something like a back ratio, which is a trade where you can benefit from a large movement in either direction. It's not something that's necessarily going to work for you if we lay there, right? But you can put it on a number of different ways. I'll just give you an example here. But you could do, it's a callback ratio that I normally do. And a lot of times I look at a 2x3, selling 2, buying 3. So you're always buying more than you're selling, but you're buying them further out of the money. Now you can do different ratios. You can sometimes do 4x3 or whatever, but often I do 2x3. And then if I want to get bigger, I just go up with those same numbers like 4x6, 8x12, that type of thing. And a lot of times I do these 50 points wide. So this isn't something I do today, but I just wanted to be able to talk to it about it a little bit. Yeah, it looks like the pricing isn't too good at this point because of the vol levels. But a lot of times what we like to do with these, let's say I moved this in here before the election, you kind of get a better idea. But it's the kind of trade that if it takes off in either direction, you do really well. In fact, on the bottom, it could never go too low. You make at least something all the way down because you put it on at a credit. And it's a call. So as long as anytime we're going down, you're doing just fine. But on the upside, you really needed to do it quickly. But that's the kind of thing that I'd like to get on before the election, or just outright maybe what we call time bomb flies. We can talk about those too, where we pick where we think the SPX or whatever index we're using might be at a certain time. You could also do it with stocks. But that's the kind of thing that I would be looking at during election week, something that takes advantage of huge movement. You could even do things like go over and get long the VIX with a call vertical. I wouldn't like buy the VIX or anything, but you might say, I'm just, going through the channels here, things we could look at that before the election. You could go even to November 18th and do things like buy a call credit vertical, maybe buy 30, buy 50. That's the kind of thing that buy 30, sell 50, that is. And that's the kind of thing that I'll be looking at to do around the election, because I really think we're going to take off like crazy with the volatility and market movement election week if we don't have a definitive result. And I think in the world we're in, there's a high chance that election night, whoever wins, the other side will sue, just like they did. And if you remember in 2000, Bush won, the Democrats sued, and ultimately we didn't have a clear presidential winner until, was it mid to late December, when it went to the Supreme Court and Al Gore then conceded. But that's the kind of thing I really expect to happen again. And so that's kind of my overview of where I think this class would probably be headed, is looking for things like that. And then after the election, well, we'll have to see what goes on. Or do we still have crazy volatility? Hey, we can do those back ratios over and over if there's nutty volatility after the election. All you need is price movement. And just like we did back in March, where it seemed like, wow, for a couple of weeks, every morning we were up or down 80 or 100 points. Well, that's perfect weather for that back ratio. If we get to that, we'll see what happens. But if we have a definitive result, then I expect that the market will probably close higher into the end of the year. We can talk about that, how to get long, bullish type trades. And that's just kind of where I see us headed. I think we got a lot of volatility ahead, a lot of opportunity to make some money, particularly on price movement. That's what I have on that. Dan, are you still there?
Oh yeah. Thanks, Mark. Yeah, that looks good. And we appreciate Mark. Mark will be with me, except for next week, going through this. And I'll have some slides each class with some teaching. So you're getting not only live trades, and follow through so you can get practice there. But the concepts that we're talking about with some slides explaining stuff so you can, build a little book with. Brendan says, Mark, so back ratios are held very short.
Yeah, probably a day or two most of the time. You wouldn't be in it much longer normally than that.
All right. All right. Well, thanks, Mark. Appreciate it.
All right. Talk to you guys soon. Bye-bye.
Thanks. All right. Well, what I'll share with you folks is focus a little more on what I think, again, if we're doing range bound, for the range bound part of the portfolio, what do you think is the number one thing you need for range bound trades? What do you think is the number one thing you need if you're doing range bound trades? Some type of a range. It's pretty simple, right? I mean, and if you look at the chart here, again, and I look maybe over the last 2 months. I'm not when I'm talking about that question, are we range bound? So we look at the SPX over the last 2 months. Would you say there's a type of a range there? Yes or no? What do you guys answer that? Yes or no? Yeah, I think there is. Yeah, and so as long as there's, there's more to it than that, but that's the basic question. And I'd say 80 to 85% of the time there is. So to me, as Mark kind of pointed out where he thought SPX could go before the election, maybe 3,500, a little bit over that, or some over that, or on the downside 3,400. I don't think we're going too far north or too far south. Could we? Anything could happen, but I think before. So when I look at the market, I'll just give you one trade I'm looking at. If you look at the market in terms of the available expirations, the only ones that I would play are the ones before the election. So that would be NOV 2, OC 30, OC 28, OC 26. So, NOV 2 is 13 days out, OC 30 is 10 days out, OC 28 is 8, OC 26 is 6. So, the good, the bad, and the ugly. The good thing is they're not affected as much by the election, because the election will be after. I think we'll be range bound still. I think these will work fine. The only concern is as you get closer to expiration, does price risk go up? Yes or no? As you get closer to expiration, as your duration gets closer, 7 days from expiration. So you got to be a little careful with that. So like I was looking today at a OC 30 iron condor. So I'll just show you when I was looking at OC 30, which I like. And I think, again, also, VIX is almost 29. So the range in VIX has been 22 to 35 the last 3 months. And so we're 29, a little over the middle, or in the middle, a little bit higher. I think those are decent premiums. So I'm looking at something that gives you pretty resilient, even with the moving, right? We've had, yesterday we were down 40, up 43 today. But again, I think we're range bound. We're not just getting one way, we're getting two way. Obviously, if they get the stimulus, another pop maybe to the upside. But here's something that gives you some decent room. So I'm looking at OC 30, and on the call side, on this particular one, looking to sell maybe a 16 delta on the calls, like 35.85, and buy my hedge 35.95. The foundation of an iron condor is selling out of the money call and put. So it's a probability trade. That's called a short strangle. And we buy the hedges against it. to keep the risk and margin under control. On the put side, I'm going to sell a little bit higher in this particular example, maybe a 22 delta, and that would be the 33.65 puts. Buy my hedge 10 points further out of the money. So here's how the trade looks. Going to be our Greeks pretty close to neutral, less than a quarter of a delta short. Nice positive theta, short Vega, benefit if the volatility goes down. Here's where the underline is right now, 34.69. It's a 10-day trade. I'd look to be in this maybe 3 or 4 days, trading days. On the upside, I'm selling the 35.85s. So about 115 points out of the money. And again, if I'm looking to be in this for 3 or 4 days, if you look at an expected move or standard deviation over 3 or 4 days, it's nowhere near 115 points. The short put is 33.65. So maybe 105 points out of the money. I would classify this. And again, when I do something like this during the class, I would do a slide on this and just explain it a little more. This is an equidistant, what I would call an equidistant iron condor. So I would include, anytime we talk about something, a slide with all the relevant information of what it is and when we would do it. But this is an equidistant iron condor. Not exactly. The short call is 115 points away. The put is 105, but it's relatively, I would call this equidistant. My deltas are close to zero. And, the credit on this, I did this earlier today some. So I'm bringing in about a $3.30 credit. So my credit spreads are 10 wide. So $1,000 of risk less 330. So you're putting up $670 of margin or risk. So this type of trade I would put on, every week, 10 or 15 days out. Would I do this before Pelosi announced the deal or after? I mean, right now I'm looking before the election. Whether, that is out there that Pelosi could make the announcement. But again, I think it's how many people think that most of this is in the market, the stimulus? How many think that in other words, is the market aware that Nancy, in other words, are we the only ones aware that Nancy and Mnuchin are going to be meeting today? Is this information that just we know? It's been there. So I think the market has a good, so I'm not saying we can't move 40 or 50 points or, when it comes out, but I still think before the election we'll be in a range here. So I think this would work out. So the credit is 330. You're bringing in about $670 of risk. And again, during the class, I'd have, anytime I talk about a strategy, all the relevant risk reward, the adjustments, go through the whole 9 yards. So you'll be able to make a little book about all this stuff, which will be helpful to you. So do I consider gamma risk in trades like this? How do you deal with that? Again, gamma and delta refer to what type of risk? Gamma and delta refer to what type of risk? Your two main risks in iron condors or most trades are price and volatility. So delta and gamma refer to price risk, and theta, time decay risk, Vega, volatility risk. So, when you're doing a 10-day trade like this, you have more price risk. So you're more delta or gamma risk. So how do I deal with this? And this we'll talk about in class a lot. We have a very good strict plan, right? So we deal with the gamma risk and the delta risk by having a very solid plan where we take our profit, where we take our max loss, where if we're going to adjust, where we would do. So, we know that, when you do trades under 14 days, you're going to have more gamma and delta or price risk. And so you just have to appropriate be less size as you get smaller duration, but really it's the plan, right? It's not a trade with increased or decreased gamma that's going to cause you a problem. It's the risk management. Agree? Would I put first one side and then leg in the others? Normally I would just put an iron condor on as one, right? If you trade it for a long time and you're very comfortable and you want to do the call side on an up day and the put side on a down day, that's one thing. But generally, if I'm trading these for the range bound part of my options portfolio we're teaching and income trading, generally just put the thing on. So anyways, folks, I just wanted to give you just a little preview, a little taste of what we'll be embarking on for the next really couple months as we go through both classes. I think it'll be a great education, practical education, in that we'll be putting on plenty of trades live, and you'll see what we're doing, and we'll explain everything. So I think you'll get a good education if you're looking to do this on a regular basis. I think this will be a good opportunity. So folks, have a wonderful day. We'll see you a week from today. Will be the launch of the class. You can go on SheridanMentoring.com and sign up. If you have any questions, you could get hold of us. And again, thanks again, folks. Appreciate you being here. Thank you.